And this is the trade I analyze. The trade is going to TP, definitely. We know we are hitting TP on this trade. Another day of doing analysis without taking the trade. Meanwhile, while I took this buy, I saw price reacted off of this place last week. Then price, after creating a lower low here, and this 45 minutes OB here, with this place as inducement. If you go to your longer time frame, you will see it. Then price reacted off of here. When price got to this high, price did something unique. So price created a break of structure here. This is another break of structure, and this is another break of structure. Why did I use here? If you go to your 1 minute, 4 hour time frame, sorry. If you go to your 4 hour time frame, after this sweep, the next inducement is this. Then using that information, then you move to your lower time frame. I went to my 1 hour. I saw this zone here, but then again there is a zone here, so I was contemplating whether to use this zone or to use this zone. Then I moved to my 30 minutes. This was when I used this breaker block here. This is the breaker block I used. I just traced it from this side so I can get the tip. Normally I usually use the wick, starting from the wick, because sometimes price just move in a little. If you don't put it from the wick, it won't mitigate you on your, what is it called, on your broker. Then it will start going. After that, I realized this place is the invalidation zone. So if price was to break this place, that means I already failed. That means this what is it called, analysis is wrong. But my breaker block has to end here. So I this could have been a 15 pips SL, but I had to make it 17 pips to be safe, just in case price wants to come down. Normally it would have been 15 pips, and I target a fixed risk to reward of 1:5, depending on the target, depending on where my drawn liquidity is. If my drawn liquidity is closer, I target 1:3 to be safe. So I trade 1:3. Of recent, I started trading 1:3. Okay, there is a backstory to it. At first, I used to trade 1:3 fixed RR. No matter how high my target is, I increase my SL to accommodate the target. Then at some point, I registered for a class and I learned new things. I learned another things. I was trading supply and demand before I moved to SLP. When I trade supply and demand, this is called the flip zone. On supply and demand, this is called the flip zone. So when I trade for supply and demand, I would have increased this thing to accommodate this. Then it will give me 1:3. But trading SLP, SLP, I've realized that there is a way price works, and this is actually how it works. So here being my target, why I targeted there, price is likely to go up. Why I targeted there is that here is a very strong zone, a possible resistance for reversal. Price can go back here, price can start going back, but I believe there must be a spoof. After the spoof, price can start reversing. If I didn't take this trade because I have no account to take it. If I had an account to take it, I would have taken it. I lost my trading account last month. I lost all my trading account from funding pips, my good funded and stuff. Last month was a very strong month. That's not because I didn't get much trade. I hit a lot of TP, but I lacked discipline. I had two losses in a row. Then my emotions kicked in and I started trading anyhow. So I traded with emotion and I lost the account. And recording this video, I have no account and possibly no hope of funding, but I keep on doing my analysis. I wake up in the morning like I usually do. I did this analysis by 8 in the morning like I usually do. Sometimes I sleep all through the night, 1 a.m. I still do my analysis, and I don't hope to stop anytime soon. But I believe I money will come again and I will get the money to fund again. But that is that for that. So that's why I didn't take this trade, because there is no account to take it. But the trade was an excellent trade. Let me show you before of the trade on my gallery. Oh, here's my gallery. Don't mind me. Here is the before of the trade. This was when I did the trade. I did the trade around 8 in the morning when price was still up. That was when I did the trade. I knew price was coming to this point to reverse and start going up. So it's a very simple logic, and that's it. Push. Bye bye. See you next time. This is price currently now. Still going, soon to hit TP. Nice 85 pips. TP. First trade of the month, and that's the TP. I had my analysis on some trades too, which didn't go well. I had analysis on gold, although I've deleted the gold chart. This is silver. I had this analysis on silver. I didn't take the trade. If I had taken the trade, I would have closed the trade probably. I don't know. I had analysis on gold, which I didn't take. I had my analysis 15 minutes. I had my analysis here. I was supposed to take a sell here. I deleted the order, and I didn't take a before trade. Why I deleted the order? I didn't take before trade. That was why I deleted the order. And again, another reason I deleted the order was I had two zones. I was contemplating whether price would come here and react, or price will react off of this place. So this was how I placed my analysis. If I had an account, I would have taken this trade from this place. Definitely taking this trade from this place. My SL would be here, just slightly above here. That's how I trade. Target 1:5, and it would have been a TP. But I didn't take this trade, and I don't want to keep the chart because I didn't take before of the trade, so I wouldn't want to keep the trade. That was it. I had a trade again on USD JPY, which didn't mitigate but went away. If I had the JPY, USD JPY, I had this trade. I did the analysis. I was hoping price would come here and start buying. This was the beef. Let me show you the beef. This is, oh sorry, this is Euro NZD USD. I've not checked this place. This was the USD JPY. I was hoping price would come down and mitigate it, but price did not. Let me use this opportunity and check this NZD USD. NZD USD. It was an SL. With this trade, I know I wouldn't have taken this trade. The trade is not on premium zone. How do I know I will not take that trade? I usually do more than 3 analysis, then I take the one that is A plus setup. I would have taken the GBP JPY for sure, but that on this I wouldn't have taken it because it's not on the premium discount zone up. It's on the premium zone, so I don't buy from up, my dear. So I wouldn't have taken the trade though. But I usually do analysis, rough analysis every day on different pairs. Then I select the one I trade. That's how I trade, and that's why I catch some good setups too. If I hadn't taken I usually take 2 trades a day, so I know I was going to take the good trade, either good or bad. I usually take good setup. Anytime I see good setup, I take it. GBP JPY definitely looks more promising than what is it called, than NZD USD, and I wouldn't take this NZD USD considering I was trying to sell good, so I knew I wasn't going to take this trade. I would have missed a trade, or I would have missed the USD JPY, because I would set the limit order. Anyone that triggers first, I cancel the rest. That's how I trade. So that's that for that. See you tomorrow, or probably before this weekend.